Morning, this is Tom Alexander. It is Thursday, July 7th. It's 8:57 a.m. Eastern time. This level that we're flirting with here is critically important on several different time frames. At this point in time, and I realize the cash market is not open, you want to be long or you want to be flat. You can see we're making a very choppy series of higher highs and higher lows. And to show you the importance of this level, here's a 30-minute chart. And this gives a really great view. Above here, there is really nothing. You're in this elevator shaft, and there is nothing until you get to here. Now, I'm not saying you necessarily, this doesn't reverse and trade lower, but I'm saying at this point in time and all time frames, you can see even on the 30-minute chart, there's a choppy series of higher highs and higher lows. We're at an inflection point, and on the short-term charts, we're making higher highs and higher lows. So it's pretty simple. You're either long or you're flat. You can't be shorting this, in my opinion, at this critical inflection point. The short-term pattern does not support that. So that's, I think that's where we are. You know, the market has been choppy up and down, difficult to trade. At some point that will change. All you can do to combat that is to be disciplined. If the market is making higher highs and higher lows, you want to favor longs. If the market is making lower lows and lower highs, you want to favor shorts. Now, that's the tactic and the strategy. The analysis depends on the larger degree phase of development in the market. And that's where you apply the strategy and the tactics. It really gives it additional edge, but that alone will keep you out of trouble and will put you on the right side of trades. Okay, if you're just coming in, it's 9:13 a.m. Eastern time on Thursday. You have to be favoring long trades. We're at a major and a very important inflection point. At this point, you have to be long or flat. This, now we're coming into the cash open, and then this could get blown out of the water both ways. So a little bit of a caveat here, but this is a balance area. You know, this market is going to move sharply away from here one way or the other. I think it overall, based on Globex action, it's net bullish. So I'm favoring longs in here. And, you know, when you choose to trade the first, I don't know, half hour of the day, you know, you run into randomness. I get stopped out a lot. Most of my trades, most of my losses, the highest percentage of my losses occur in the first half hour. However, my biggest gains occur from trades entered in the first half hour. So we all have to measure what we choose to trade. There's potential here, a lot of potential here. If this thing breaks to the upside, that one of these pivots is the low of the day. Okay, we're bumping up against a really, really important level. I showed this earlier, very early when I first came in. Here's a 30-minute view of this. And we're flirting with this elevator shaft. If we start to generate some momentum, I think you'll see 39.63, 39.56 sooner rather than later. Now, at this point, the cash market close of yesterday is going to be your downside level to keep an eye on. But right now, based on what we're seeing, and it's 9:32, so let's put that in perspective. You got to be favoring longs. You know, it's always noisy at the beginning. They don't make it easy. Right now, it's straight up. You certainly, and there's no one in this room that should have any inclination about fading this. Okay, a couple of things. If you're not in a trade, the trade here, if you choose, is to be long. you could go long here, and I think you have a positive expectancy. Now your stop has to be way down here, but you know, if you're not in it and you're sitting there wanting to short this, that's not the thing to do. The thing to do would be to go long here. And this gets back to the recent webinar on context. I'm looking at a daily chart. It looks like this upper key reference area is going to be a magnet for one or more of the indices. Everything is in sync at the moment to the upside. That shows some institutional conviction also at the moment. And again, it's 9:40, so it's early, but breadth is extremely positive. And as long as we're making higher highs and higher lows, you want to be long. You can't be fading this market. Okay, I'm still favoring longs in this market. It's 10:02. It's very early. Breadth at the moment is positive. Now, your best protection here, if you are long this, and you can't be short this. I just, at this point, there has been no signal to be short this. But if you're long from down in here, my advice or my thought is, not advice, you have to trade your own trade plan. You don't want to lose money, but the potential for this trade is significant. Now, and I have to acknowledge we're in a bear market and we've had these wonderful starts and ramps and breadth is good and everything looks great, and then everything reverses. So that could happen. That's something you can't really predict. You have to be aware that that has happened. But I'm continuing to favor the long side of this market. If we take out yesterday's cash closes, then I will very quickly, if not sooner, but that would be the thing that would get me to be favoring shorts. But I do think we're in the area of a very important inflection point that leads to the most critical inflection point on an intermediate term basis, which is above. Okay, it's 10:30 a.m. Eastern time. You want to be long or flat? You can't be shorting this. This is the picture of the daily view. I can't overemphasize, in spite of trying to overemphasize, how important it is for context to keep a chart of all 4 daily indices up. This is on one of my screens always, and it's a great guide. Here are the next levels. We're between levels. We're in the elevator shaft back to the upside here. Now, just from a pure price action perspective, forget breadth, forget VIX, all this other stuff. This is very positive at the moment. Now, another thing to note here is that we don't really have particularly wide range days, especially in the NQ, the ES, or the YM yet. Now, the Russell is showing some relative strength. I also consider that to be a net positive because it's the broader market. It's sort of confirming breadth. So, you know, this continues to be evidence on the bullish side of the ledger, not only for today, but to reach at least this area in here. Now, it's possible, and I've said this before, you have to be careful about a level above the market, assuming it's going to be resistance. It may not be resistance. We could see acceleration through here. So consider that if you're long in the management, excuse me, of your trades. I don't know, you know, there's no way for me to know what dozens of people have in their trade plan, but the potential for a long today near the opening is very, very substantial. Trade location is critical. And this is another example of that. Some trade location has higher value than others. The trade location offered early this morning, actually before the cash market opened, was of tremendous value. And it could lead to a swing trade opportunity. Now, I'm not telling you what to do. I'm pointing things out. If you have outsized gains that you don't typically get, take something off the table. If you don't understand what's going on and you have some sort of outside gain that you haven't seen, take something off the table and relax. But for those of you that are more experienced, trade for a bigger picture, this is a bigger picture opportunity here with an intraday trade entry. I trade all time frames, I day trade, but I'll also carry trades over when I think there is potential. And I think there's potential here. I think, my guess is we're going to reach this level. Now, I'm not going to sit here today if the market starts making lower lows and lower highs and hold that position. I'll get out. And I'm basing that on the shorter term charts. But as long as the shorter term charts are making higher highs and higher lows, I'm going to hold part of my position. Okay, now I'm recording. Okay, it's 11:54 a.m. Eastern time. And you can see have a very, very, very definitive pattern of higher highs and higher lows. Now, we really haven't had that just super strong acceleration, at least yet. I mean, we had the burst at the open, then we had a fairly deep retracement. But since this retracement, we've sort of been chopping higher, and we continue to chop higher. But if you're trading this, if you're not in this, you have to be biased alongside this market for a bunch of different reasons. The simplest reason is that on this screen, in reality at this moment, is the market is making higher highs and higher lows. Now, if you throw in the context of the bigger picture, the daily chart, which I'll drag over now. The next level that could be a magnet is right up in here, and we're not there yet. Now, there's nothing magic about this level being reached, but you're in this elevator shaft that was created on the 28th. So there's fuel for this. There's fuel for this because this is an elevator shaft, and from an auction market structural perspective, when you're trading this deeply into this much conviction, you're very likely to retrace the entire range. The other or another part of the equation from a bullish perspective is VIX. VIX continues to drop. That can add fuel to the fire if this thing gets going. So this market could, even today, actually accelerate to the upside. So at a minimum, you don't want to be short, okay? That's first and foremost. This is all about risk control first and foremost. So you don't want to be short. And if you're trading, in my opinion, your trade should be biased to the long side of the market. Breadth is friendly at the moment. It's off its high of the day, but it's still healthy. It's plus 1,600 or so. Now, I will continue to watch breadth very closely the deeper we get into the afternoon, because you don't want to see breadth petering off. That sort of happened yesterday if you were trading. And what happened is we got this sell-off because you had this massive divergence in breadth that began to occur. Now, is this a divergence in breadth right now? Again, it's all about context. This is sort of a lull. Yeah, it is. And we do need to see breadth pick up. We don't want to see breadth in a sustained downtrend, because that will put a lid on this thing in the short term. Okay, somebody emailed me and asked me about that. I was talking about the pattern in crude, and this is that two-sided grind that results in a sharp move, up or down. Now, I'm not selling this, but this market is grinding higher. I think you're going to see this thing accelerate higher sooner or later, or you're going to go down and start testing these pivots. I'm long, I'm biased long. But I do want to see this thing accelerate to the upside short term, but that's my book talking, so to speak. But I'm just pointing out that we're going to get a sharp move here. Even if we trade down here, depending on how we get there and what happens, I would be biased to the long side. Okay, guys, it's 2 o'clock. And the Russell, not the Russell, the NASDAQ, the NQ, I'll show you, has reached the lower extreme of its upside, quote unquote, target. The other indices are pretty much in sync. Well, they are in sync. The Dow is is lagging a bit in terms of relative performance. The Russell is doing really well, which goes on the positive side of the ledger. If the NQ takes this level out, I'll be tightening my stop if I'm not already out of my ES position, because you could get some pushback from around this area. But at the moment, everything is continuing to point to a bullish resolution to today, and we could accelerate, guys, this afternoon. Breadth is picking back up a little bit. It's sort of been on a lull. Let me look at VIX. I'm sure it's still dropping. VIX is off its lows. Would like to see it go to new lows for the day. So keep an eye on VIX. But overall, it's come in rather significantly today, but there's plenty of room for it to come in more, which is potential fuel for continuation of this rally, not just today, but in the coming days. Okay, it's 2:30 p.m. Eastern time. And, since this early spurt this morning, we've been grinding higher to one degree or another. One thing that I'm watching for very carefully, and obviously I'd like to see this because I'm long, this is my position. I'd like to see this blow off type of move. And I'm talking about short term. I'm not talking about daily. I'd like to see this wide range bar to the upside that we haven't seen since this morning, very early when this thing took off. This has just been this algorithmic grind where they keep buying it slowly. Every pullback is bought. And and as an aside, this is where your retail trader just gets blown up. Now, could we have all of a sudden this 15 handle downdraft? Yeah, we could. And I think we'll either get that or we're going to get acceleration to the upside. But betting on that is just not the way to trade. You can't trade that way. Everything today has been pointing to the upside of this market and favoring the long side. Now, if you're not long now, if you don't have a position on, there's not quite frankly, the reward to risk here isn't real great. Another 20 handles up and we're into that window, the key reference area on the daily charts. You're already there in the NQ. So, and could we have a 10, 15 handle air pocket to the downside? Yeah, we could. This has been very two-sided. It's been a very two-sided grind, certainly higher. Now, what I want to see, obviously, because I'm long. I want to see this big release. I want to see the shorts that are in here, probably a lot of retail shorts, get blown out of the water with this big spike to the upside. And that will be a place where I'll seriously consider tightening stops on part of my position and or taking partial profits. It's 2:35, and on cue we get the air pocket. Now we're going to see what's going to happen. This will put in a pivot that hopefully will lead to a test of the highs, and it will be the next pivot that you want to keep an eye on in terms of you don't want to see it broken for the rest of the day. But this is, as I said before, we were in a position where I thought you would see something like this, or you would see the market do the opposite of this, which is what I was hoping for. But you don't always get what you want. Okay, it's 3:07. At this point, what I think you need to do is just continue to raise stops. You can use the previous pivots, but we just, this thing is relentless to the upside. We had the air pocket down. Now we're having more of what I was looking for, where, I think this may be the widest range 3-minute bar. Gosh, well, since maybe over here. So this thing could still accelerate into the close. Okay, guys, it's 3:54. At 4 o'clock, I'll come in and we'll do a review. I think it's important to take a look at some things as we head into Globex and into tomorrow's cash trade. Okay, 4 p.m. cash markets are now closed. And let's take a look. So if I can get this over here. Okay, here are the futures contracts. Now, futures will still be trading. Cash market is closed, but the net of this is that all the indices are going to go out in the cash market on or near their highs, regardless of what happens between now and the Globex close of this session. So this is reflective of the cash market. Now, what is important heading into tomorrow under a bullish scenario is pretty simple. Ideally, any retracement that occurs will hold near the 50% retracement level of today's range. That's just a guideline. And ideally, we'll follow through in Globex and we'll trade higher tomorrow into the highs formed in June. Now, let me go to the cash markets. And let's talk about those for a minute. Let's see, okay. All right, so this is the S&P. And we had the big gap up. This was the close from yesterday. So now the futures range includes Globex, that the cash range does not. So maybe you give it a little bit more in the cash market retracement below the 50% level, but not a lot. And certainly you should not trade below today's cash session lows. Trading below today's cash session lows, if all four do that, could be immediately very bearish. But certainly you do not want to see a close below today's cash session lows. Even a trade below today's cash session lows brings this ramp into question. Now, if you look, you can see, here are the key reference areas. This was in the report over the weekend. These key reference areas are important. Now look at the NDX. The NDX is not far from taking out the high of the 27th, the cash high of the 27th. So it is leading the charge higher. Now, if we see strength above these late June highs, then your next level is going to be up here in near the early June highs. And in the NDX, that would be the initial place to keep an eye on would be right in here. And let's see, you can see we're considerably, we'd have, that would be quite a move at this point to get from where we are to up here. But if all four close above the June highs, then that's your next level. There is nothing objective above the late June highs, between the late June highs and then the early June highs. Now, if we look at the internal picture, again, this can go, this is at a point that can go either way in terms of breadth. There's certainly room for expansion before the 10-day or the 5-day reach anything resembling extremes. So there's room there. And then if we take a look at let me find, I think this is it. Okay, here is the VIX. VIX continues to drop. And as I have been saying for a while, a dropping VIX is going to be bullish for this market. And there is a long way for VIX to drop to anything resembling really normalcy. So this could be real fuel to the fire. Now, everybody and their brother is going to be watching these June highs. So if we do get up there tomorrow, there could be some short-term turbulence, some pushback in that area, just because it's such an obvious area and it will be gamed. Algorithms will be all over it. So just be alert to those levels tomorrow. But at this point, based on today's price action, I would expect those June highs to be tested or exceeded, because there's nothing here that suggests any sort of an extreme from an auction market perspective. Guys, have a wonderful evening. We'll pick it up again in the morning.